Welcome to another video. Today, what we will be doing is performing a full breakdown in the market. So taking a pair, analyzing it both from a technical and order flow perspective, and by using the combinations of these two different types of analysis, we will be able to understand which is the best probability zone to be looking for a good trading opportunity at the moment in the market. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms every single day. So I really suggest you subscribe to the channel so you won't miss out on all this free education and analysis. And I will see you in the video. Okay, so what kind of situation do we currently have on EURUSD? That is exactly what I will be speaking about in this video, so giving you guys a full breakdown on EURUSD, and by the end of the video you will know exactly which area to be looking for a potential trading opportunity on the pair. And as usual, I will try to keep the analysis as educational as possible so that you will learn a lot of key concepts that you have to use in your own trading and trading strategy. So let's start with our analysis. Here on the monthly, what do we have? We can clearly see that the market has created a huge impulse to the upside. After an impulse, if we want informations on the retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the low to the high of the impulse. And by doing that, what we can see that the market retraced exactly to the 0.382 of the Fibonacci taken on the impulse, and it rejected the zone to the upside already with these two rejection candles. So on the monthly, situation is quite bullish. We have a market that we expect to be creating a higher high. So overall, we definitely would like to see the completion of this impulse correction and impulse pattern to the upside. Now, obviously, this is something that is going to happen long term, if it will happen. So it is something that obviously we will be able to confirm, also checking the order flow for the pair. That is something that we will be doing later on, just to see what the biggest banks and institutions are currently doing on this specific pair, so how they are positioned. So on the monthly, the only thing that we can clearly see and we can take from it is that we have a market that has created a nice impulse, a nice correction, already rejected the 0.382 and started a new impulse to the upside. Going down on the weekly time frame, what do we see? Now on the weekly, situation is very interesting because we can clearly see from a weekly perspective that why did the market actually start the new impulse to the upside on the monthly? Because on the weekly, the market had created a nice double bottom and we definitely expected to see this big move to the upside. In fact, as I will show you later on during the video, we were actually able with students to actually capitalize on this move to the upside. And why we were able to capitalize on the move to the upside? Because it was pretty expected for EURUSD to actually make this move to the upside. On the monthly, impulse correction and impulse. On the weekly, double bottom and break to the upside. There is one last thing that you also have to remember from the weekly time frame is that the market clearly has now created this W formation. Now in general, if the market creates a W formation, what do you expect? You expect the market to give you a pullback back to the neckline of the formation, aka the previous resistance, which is now turned support, which is the completion zone of the pattern. So on the weekly, we can actually expect the market to give us a retracement to this level. So already by looking at the monthly and the weekly, we have taken a lot of informations because on the monthly, impulse correction, and we know that we would like to see the market create a continuation to the upside and create a higher high. And on the weekly, we already have seen that the market has created a double bottom. We have seen that we definitely expected this move to the upside, and we have seen that the market has created this W formation. Therefore, what we can expect from a weekly and monthly perspective, we can expect continuation to the downside for a retracement just to complete the weekly pattern, and then continuation to the upside for the completion of the monthly impulse correction and impulse pattern. So already we have a lot of informations. Perfect. Let's move on and go down on the daily time frame to see what we have from a daily perspective. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now on the daily time frame, there are a couple of very interesting things that we can see. First of all, the market had created a very strong impulse and correction here. Now, after this impulse and correction, specifically because on the monthly, we wanted to see the continuation to the upside, and on the weekly, we had the double bottom, we definitely wanted to see the market make this explosion to the upside, which is exactly what the market did. And in fact, with students, we were able to capitalize on EURUSD for this move to the upside with a very good risk to reward. In fact, what we were able to do is capitalize for a beautiful 1 to 3.3 risk to reward trade to the upside. And before that, we actually also capitalized on the retracement that we wanted to see here for a nice 1 to 3 risk to reward. And then again, we took this 1 to 3.3 risk to reward trade to the upside, which is definitely very, very good. So we capitalized on this move to the upside. What is next? Now, the thing that we can clearly see here from the chart is that the market on the daily is clearly overextended to the upside because the market created all this impulse without giving any sign of a retracement. And if you remember, on the weekly, we also have the W formation, which is a pattern that brings a retracement. Now, if we want to determine a first possible target to the downside from this daily impulse, what are we supposed to be doing? Taking your Fibonacci from the low to the high of this impulse. And what we can see that we have a first possible take profit to the downside at the 0.382 of the Fibonacci taken on the daily. And we have our second target, which is the 0.618. Why the 0.618? Because it is the Fibonacci level that is aligning the best with the neckline of the weekly W formation, meaning that if the market will reach this area, it will have reached the weekly target, so the neckline of the W formation. So we have two possible targets. This one here is the daily target, and the one that we have here is our weekly target. So now we have two targets in mind, okay? And we expect the market first to reach our daily and then to reach our weekly target to actually complete the W formation that we have on the weekly. But can we be immediately shorting EURUSD? Obviously not, because trading is reactive. Trading is not predictive. Trading is reactive, not predictive. So how are we supposed to be approaching it? Now, before I show you how we will be approaching EURUSD with students, let's first go and give a quick check at what we have on EURUSD from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing on the euro and on the ZAR. Let's start from the euro. Now, on the euro, what we can see that institutions have been adding massive long positions on the euro. In fact, we went from 147k longs all the way up to 242k long positions from an institutional perspective on the euro, which is massive, very massive. And in fact, we can see that reflected also in the net positions that went from minus 114k all the way up to plus 157k. So from a situation where we had way more shorts than longs to a situation where we now have way more longs than shorts. So the completely opposite situation. And in fact, with the last report, we can see that they added 37.9k longs. So could we expect this move to the upside? Absolutely yes. Institutions were aggressively buying the euro, and we definitely wanted to see the continuation to the upside also from a technical perspective, and that is the reason for which we capitalized on this move to the upside on EURUSD. And if we go and see what we have from a ZAR perspective, what we can see that the net positions of the ZAR went from minus 1k all the way up to plus 4k, which is quite massive. So we went from having more shorts than longs to having more longs than shorts on the ZAR, which currently has 8.1k longs and 4k shorts, so double the amount of longs than shorts, which is good because, as we just said, we would like to see the market give us a retracement. So if the ZAR is getting stronger, it will be easier for the market to give us this retracement and a completion of the weekly W formation as we want to see. So ZAR getting strong. Euro has already gotten strong. The market has already made the huge move to the upside. So can we expect a retracement? Yes, because we have already seen the move to the upside. So we can expect some profit taking on all these longs. So we can expect profit taking on this massive 242k longs, at least a small amount of profit taking for a nice retracement. So definitely the COT data is in alignment with what we have here on the chart. So how we'll be approaching this situation with students. Now, as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4-hour time frame. And if we go on the 4 hours, we can see that apart from our trades, we can see that clearly the market is currently creating higher highs and higher lows without any sign of weakness. So the market is clearly impulsing to the upside in a bullish trend without any sign of weakness. So can we be taking a short? Obviously not, because it's the worst thing that we could do. We would be shorting a bullish market, which is never ever a good idea. So how we will be approaching this situation with students, we will be monitoring price action all inside of this area. Even if the market will continue to the upside, we will continue to monitor price action from a 4-hour perspective, waiting for the market to shift from a bullish to a bearish market on the 4-hour time frame, and only then, if that will happen, we will add EURUSD on our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the market to actually make this move to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day, including the weekends. So I really suggest you go and check it out, and I will see you in